Hi traders, this particular lesson is all about the ICT Breakout Strategy. Okay, it's a method that focuses on how smart money creates and uses breakouts to control the market. Now, most traders see a breakout and immediately jump in. Okay, but in reality, many of these breakouts are engineered to trap retail traders. Okay, the ICT breakout strategy helps us distinguish between false moves and true institutional breakouts, giving us a structured way to read the charts. All right. Now, let us quickly start with the foundation, shall we? And the foundation that we're going to be discussing is simply liquidity. All right. We're simply going to be discussing the concept of liquidity. Now, liquidity is the fuel for every market move. Okay, it gathers around equal highs and equal lows, where traders place their stop losses and pending orders. Now, these levels become magnets for price, right? Institutions use this liquidity to trigger large breakouts. When price builds up against a level for some time, smart money often pushes through that level, creating the breakout. Okay, but here is the key: not every breakout is real. All right, like what we can see happen here. You can see that this was not a real breakout, right? This was a zone that might have seemed legit, right? Multiple rejections, but eventually this breakout was not a legit one. This was the legit breakout that finally happened. You can see price even came back to test this zone and got rejected before we finally had the breakout that prevailed. So just know that not every breakout is legit, okay? Not every breakout is real. Many are simply stop hunts. Imagine you had entered a sell trade here. You would likely have set your stop loss just some pips above this zone, right? But when this stuff happened, it would have taken you out, and you see price reversing back in your direction, right? So this is one of the things that happen in the market, right? It's something that many traders fall victims for, right? So institutions will push price beyond the key level, trigger retail traders, and then reverse the market. That is why waiting for confirmation is critical in the ICT breakout strategy. Before you trade a breakout, please wait for confirmation, okay? You have to be sure that it is not a trap. All right, instead of just jumping into the trade after you notice that price has gone beyond a particular resistance or a particular support, wait for confirmations first. A break and a retest is actually one of the confirmations that you can always watch out for. Imagine now you have waited for price to break above this, tested this, and give you a confirmation to go to the upside. Then in that case, the chances of it being a false breakout would have been lower, right? Now, let us look at order blocks. Another block is the last bullish or bearish candle before a strong move. These levels act as footprints left by institutions. Okay? When a breakout occurs, returning to another block often gives the clearest confirmation that the breakout is valid and not just a false move. Okay? Another important element is the fair value gap. All right. So let us look for an example of price testing an order block and going back in our direction, right? So here we had a break of structure, right? Okay. We had a series of lower highs and lower lows. then we had an equal low here, right? And then we had price break this structure. We had a change of character here, right? And then we had price come back towards the zone. Now let us trace this to know if price came to test an order block here, because you can see that in this case there was a change of character here. This high was broken. Okay, so where is the last okay, we had a slight change of character here initially, so let's just mark out this bearish candle. All right, so you can see that price came and tapped into this order block. You can see that bearish candle before this impulsive move, though we had consolidation here, we had significant consolidation before this push higher again, right? But you can see that price actually came, tapped into this zone, and you will see that we had a fair value gap. You know that what fair value gap is one of the things to look out for as well, right? You can see we had a fair value gap. You can see between this high and this low. So we had a fair value gap that needed to be filled. So you can see price came, filled the fair value gap, tapped into this order block, and pushed upward, and eventually initially got rejected around this resistance zone, but then it slipped down, you know, for a bit, and finally broke out from that resistance. All right, and you can see the momentum with which it used to break out from that zone, and we had retest, although this is a 4-hour chart, right? So you can see that 2 4-hour candles, the lower wicks of 2 4-hour candles was actually touching this resistance zone, right? So we actually had a retest. Let's just go to a smaller time frame and let's see what happened there. So you see that we had a retest before a continuation move. All right, we actually had a retest, although the retest did not last for a very long time. But see, we had a retest, right? Tap back into this resistance zone before the price continued upward. Okay, so just always get your confirmations before you enter a breakout trade. Okay, true breakouts often create gaps, and price likes to return to them before continuing the breakout direction. So you should always combine your fair value gaps with liquidity sweeps and other blocks, you know, to help filter out false signals. So how do you apply the ICT breakout strategy step by step? First of all, you need to identify areas of liquidity. You look for equal highs, you know, equal lows, or strong consolidation zones. Secondly, you wait for price to sweep those levels. A breakout will push beyond them, often with speed and aggression. Third, you look for confirmation. Does price return to another block or fair value gap? Does it reject or continue? This is where the distinction between a false breakout and a true move becomes clear. So when you build this step-by-step process into your analysis, you start to see how institutions move the market. Breakouts are no longer random, right? They follow a structure that repeats again and again. Before we wrap up, if you're enjoying this breakdown of the ICT breakout strategy, hit the like button and make sure you subscribe to the channel. It's the best way to stay updated on future videos and strategies. And don't forget to share your thoughts in the comments. Have you spotted ICT breakouts on your charts before? That is it for this lesson, guys, on the ICT breakout strategy. Keep practicing, stay patient, and always focus on liquidity and structure. Thank you for watching, and I'll see you in the next video.